Their growth target was 2% growth. And admittedly, the volume designed by Remington Rand, the world's first typewriter company. What not
only in Zimbabwe, but
people are focusing on the outcome, not the input. I speak to the privileged and to the powerful, and I ask them,
Vusi, how are you?
I'm good. Thank you, Jonah.
Thank you so much, Vusi. You know, I love Quincy Jones, who says, you know, a good, exceptional leader makes people to grow, to learn, and become bigger. And that is what we have been seeing from you, especially from us young Africans. We are inspired by your works.
Thank you.
Yeah. And that has been good, especially to us as Zimbabweans. We are learning so much, especially in the line of business.
Yeah.
Yeah. So, but let's get into it. You know, in your book, The Magna Carta.
Yeah, sorry, just before you do, Zimbabwe for me is fascinating because I think, by the way, I think that's a great opportunity for somebody to produce a piece of literature about how to operate a business in an environment as complex as Zimbabwe. Because it presents the kind of macroeconomic environment that is not often experienced. So, you know, leaders in many of the developed economies talk about how to manage complexity. You want to manage complexity, go to Zim. You know, it's like it's a bit like running a business. I think in Venezuela, probably very similar. And I think for someone out there, there's just a fantastic opportunity to talk to business leaders and managers and talk about how are you delivering a consistently growing P&L and value creation for shareholders in this kind of environment. Because I'd read that. Yeah. I would genuinely pick that up and read it.
So we better write the book.
I don't have the insights. You know, I'm not as close. I mean, I know a few business leaders who run some of the large businesses in Zim. So I understand a bit of the nuance, but I think being in it every day is a very different story. If you look at the size of the informal market, if you look at the cannibalization of the capital markets, you look at the lack of liquidity, almost, you know, a dearth of cash, whether or not there is a currency, you know, all of these I think present very interesting case studies for how to build business. Because at the end of the day, people need to live, you know, so people still need to buy food and water and eat and all the rest of it. So there's still a social case for running a business. But I'm very interested around the economic model.
Yeah, let's get into your book. You talk about linear and non-linear thinking for leaders. Tell us more. What is that all about?
So we do come from a time, particularly I think in much of the 20th century, where the modality for growth has been incremental. So if you look, for instance, at somebody, even as great a business leader like a Warren Buffett, his hypothesis in business is buy and hold because of the compounding effect. And that's based on the presumption of linearity, that if you buy an asset today and it grows at a linear rate consistently, over time the rate of growth compounds on the rate of growth and you get this compound effect of growth. That's been much of what we call the structured thinking in business. So if you talk to a business leader, CEO, or C-suite executive in any of the large listed businesses, you'll hear them talk about usually single-digit growth, right? So many years ago, I had the privilege of speaking at the largest brewer in the continent, and they were having a management conference, and for them, their growth target was 2% growth. And admittedly, the volumes are huge, right? So they're talking kiloliters and thousands of kiloliters, but a 2% growth. And I sat there thinking, that's it, 2%? That's what your shareholders are paying for? I think you find a lot of that kind of linear thinking in spaces. Now, the linear thinking, you see it a bit in what it results as, which is the rate of growth that leaders are looking for. But actually what it emanates from is how those leaders lead those businesses. So if I want a 2% growth business, then in effect what I'm saying to my people is give me 2% better effort, 2% more efficiencies. And what we know for sure is that if you pursue a linear type of modality from a thinking perspective, you will likely generate a stable share growth in your business. You're just not going to shoot the lights out, and you most definitely will not disrupt. Exponential thinking tends to be different. The exponential thinking looks at the framework of operating and it says, how can we disrupt the way we're running our business today and look not only for efficiencies in how we're running our business, but actually for cannibalization? In other words, how can we destroy ourselves? Because what we know to be true is if we destroy ourselves internally, we rob the market and the challenges of the opportunity to do that to us. We become the disruptors of our competitors. And that's how we accumulate and gain exponential growth. So the two thinking frameworks are very different. They can coexist. It's very rare, but they can coexist. But it really is about the courage of the business leader at the end of the day. Which of those do you want? And I think we live in a time today where business leaders are just, they're custodians is what I call them. They brought in on a 5-year contract as the CEO, and the mandate is don't rock the boat. And so kind of what you do if you're on a 5-year contract as the CEO is you look for that linearity and growth rather than truly disruptive platforms of how to rethink the way you do business.
Disruptive thinking, we are seeing that it brings two things. Number one, it kills the old system and then introduces us to new opportunities that are coming with the new things. But the old leader will say, why should I disrupt what I created? Let's look at the QWERTY keyboard of the BlackBerry.
That's right.
Look at Nokia. Look at Xerox. Those are big names in the old. But now they're no longer there. They're still there, but they're no longer doing business as they used to do. But how does someone young as I am come and say, okay, I'm the new CEO? How do I disrupt in my thinking?
I think the reminder to all of us has to be that so disruptive thinking is an input, it's not an outcome. And I think the mistake people make is the presumption that disruptive thinking is what results. Disruptive thinking is what germinates. So if you're disruptive in the way you think about the world, then the outcome will be disruption. But let me take you back. So the QWERTY keyboard wasn't actually designed by any of the mobile telecommunications companies. It was designed by Remington Rand, the world's first typewriter company. What Nokia and then many years later BlackBerry did is they miniaturized the QWERTY keyboard with a design philosophy that the finger on the thumb should reach the thumb on the hand rather, should reach every single key on the keyboard without moving the phone away from the palm. That was the basic design philosophy. And that design philosophy was disruptive because nobody had done that before. Fast forward a decade, Steve Jobs then says, but why does the phone need a keyboard in the first place? So the point I make here is what people think about as the outcome, which is the swish of the phone, is the outcome. That's the disruption. Disruption as a thinking model is the input. In other words, you need a courageous leader to go, why don't we do it differently? The question you asked is, but why? The answer is actually very simple. All businesses die.
All businesses die.
All businesses die. You can read the Bible cover to cover, and you will not find anywhere on any of the Holy Scriptures where the creator of the heavens and the earth decrees your business to exist. So what that means is there was a point in time where somebody thought about your business, it was an idea, and they took that idea, ran with it, and they built the business. Now, if something can be created, it can and must be destroyed.
Somehow.
This is the natural cycle of the world. Right? Things come and go. There was a time the British were the most powerful empire in the world. There was a time the Spaniards were. There was a time the Romans were. There was a time the Carthaginians were. So the point about it is everything dies. That's the point. What you want to look for as a business leader is the opportunity to kill yourself. The reason you want to do that is because you don't want the market doing it. The answer to why is very simple. If the market destroys you, it's brutal. It's not going to, it doesn't ask for your participation. It certainly doesn't need your permission. It's going to destroy you. Whereas if you drive the process of disruption, you drive the process of change, you're in charge. You can dictate the rate at which that change should happen. You can dictate the rate at which that change gets implemented, and you can dictate what that change means to you. So you want to be the one driving the disruption, because if you're the one driving the disruption, trust me, it's a far better seat in the cinema of life than being the one receiving the disruption happening in the marketplace.
There's this one book that I read, Accelerate by John Cotter. He talks about
phenomenal book.
He talks about dual thinking.
Yeah.
Where we need to mix the old wine with the new wine.
Yeah.
The old one will say, okay, we know that we need efficiency and effectiveness. And the new one says we need agility and speed. How do we bring these two together?
It's a great book. I mean, I've had the privilege of speaking at conference with John Kotter, and I think he's arguably one of the greatest minds in management thinking and theory in the world today. And his work, not only around the structured organization, but what, as he calls it, the network organization, is just for every business person to read. But John Kotter asks an interesting question, which is, if you've got this structured organization, think here of the hierarchical structure, the pyramid structure, the leader at the top, the minions at the bottom, and the managers who manage the managers. That kind of thinking tends to work really well in an environment where you're seeking to be effective and to be efficient. And he's 110% correct. Yep. What that environment doesn't do is build a space of agility and creativity. It can't. It's not geared for that. So if you're running a large retailer and a cashier has a new idea about how to do pricing, who does she send that idea to? She's a cashier. And at the end of the day, she has a shift supervisor who's not really in the business of listening to new ideas. So what we know about these pyramid structures, they tend to thought new ideas, new thinking, and in themselves become the reason why companies get disrupted. Now, here is the trick, by the way. You can't run a large organization in a network. It's almost impossible. Even if you look today at Facebook, which is arguably the one that kind of breaks the mold here. But, the idea they have at Facebook is they put Mark and Cheryl at the center of all innovations. And then they pivot the innovations around the leaders as the individuals. But what they've done is they've broken the organization into its component parts. So, for instance, WhatsApp is a separate organization to Instagram, which is a separate organization to Facebook, which is a separate organization to the billings business. Very separate businesses. One doesn't know what the other one is doing. And the reason Facebook has done that is because they didn't want to do what many banks do, which is to build these silos of home loans, vehicle asset finance, credit, personal finance, and put those silos into the pyramid. Because the silos create the fiefdom with the leaders at the top, and each of those are different leaders. And because the leaders at the top don't talk, you then lose the opportunity for innovation, right? So it makes sense. I think it does make sense. The pivot for it is simply this: that whatever the strategy you choose from an organizational framework perspective, you need to understand the nuance of your market. Yeah. Let me tell you what that means. Right. If I work in an environment today where I have very large competitors, price pressure, demanding customers, it's very hard to run a network organization. Yep. Because those odds gear me towards efficiency. But if I work in an environment where I have fragmented competitors, yep, and opportunity for consumer experience differential, then I can build a network organization. So to the business leader, it's about read your environment. Yep. That's really what it's about. You have to read your environment to know the space you're in. Yep. This is why I said to you, I'd be fascinated to run a business in Zimbabwe. It'd be interesting to know which of these structures and modalities. Do you need the efficiency model? Do you need the agility and speed model? Yeah. And by the way, just one final note, Jonah. There's one thing we learned from Formula One, is that speed, agility, effectiveness, and efficiencies are not mutually exclusive. Okay. You can build a speed and agility organization that thinks about how does it continuously reinvent itself, but also thinks about efficiencies and effectiveness, as long as the rules are defined and the outcomes for everybody are clear.
I love this saying, which goes, in times of change, learners inherit the earth, while the learned find themselves beautifully equipped to deal with the world that no longer exists. So that is Eric Hoffer. And let's talk about transitional and transformative thinking. What is that all about? What should the leader be doing? Because you know what, things are changing around us. It's just like weather. When the weather is bad, it's bad. There's nothing you can do about it. Change is coming and it's unavoidable. So when trying to oppose change, is like just trying to oppose the weather. What do you say about change, transformative thinking, and transformational thinking?
Well, I think the point about it, before I answer that question, is the recognition. I think here's the big problem, Jonah. And the reason I think many leaders, whether business, political, or social leaders, find themselves suffering this thing called stress, and I've suffered it often enough to know what it feels like, is because
every one of us suffers from stress.
Yeah, I'll tell you why. I think it's because we live with the illusion of control.
Right.
And that's important. You have the illusion of control. You don't really have control. When you get in your car and drive to the office, you think you're in control of the time it's going to take you to get to the office. You're not really.
Yeah.
Depends on whether or not there's a traffic stop. It depends on whether or not there's a traffic buildup. It depends on whether or not there's some sort of external, unanticipated event that might either make your journey longer or shorter.
Yeah, true.
So I think that the real issue is we've trained leaders to behave as if they have control.
Yeah.
You don't have control. You have power. And those two things are different. Right. So power is about the mechanism as the input. I have power over how I behave. I have power over how I structure the business. I have power over our strategy. I have power over how I hire, how I reward. I have power over those mechanics. But I have zero control over how those mechanics create a market outcome. Zero control. That is up to the market. Now, your point about people being equipped and then they find themselves in a world that they're not equipped for is because we come from a time where we've thought about this thing as a control mechanism. I am the CEO. I have control. You don't have control. Okay. The market is control. The regulators have control. Your suppliers have control. Your customers have control. You have power. You have the power to think about how you respond to those things, and how you respond to those things then is a function of whether or not you're going to be a transitional or transformational leader. And those are different. Transformational leaders recognize that they can fundamentally shift the space they're operating in just by their disposition. Transitional leaders recognize that theirs is to take the organization from one platform to another without rocking the boat. And those two are very, very different. Now, you can't be both. And by the way, shareholders don't want you to be both. I think the greatest bit of insight for shareholders today is the recognition of what kind of leader operates in what kind of environment. Okay. Simply said, I am an exponential leader. I'm terrible at linear. Yeah. I suck at it. So if you're running a large listed business that has been listed for the past 50 years, delivers stable dividend yields, stable free cash flows, and you're looking for 3% growth in market share, I am not your guy. I will rock the boat. It's in my nature too. Right? But there are the kind of leaders who come into an organization who are what we call custodian, a steady set of hands who can hold on. And let me give you one final example of this. I penned a piece about 2 weeks ago as an apology to Tim Cook. I, like many people, misunderstood Tim Cook. You saw the piece. I misunderstood Tim Cook. And I think a lot of people who analyze the Apple story and have been following, the thing about the Apple story is the share price and the valuation growth doesn't reflect consumer sentiment. Consumer sentiment says there's no more innovation, the magic of Steve Jobs is gone, Apple is dying. Yet the share price continues to rally. It's reached just peak levels now. It's never seen these kind of levels before. And it's finally pushing on that $1 trillion valuation mark, right? So the question for us to ask ourselves is, what did we miss? The answer is very simple. Tim Cook is not a transformational leader. That's not his job. Tim Cook's the kind of leader you want to meet with Donald Trump. Because he understands how to manage complexity, how to manage ego, how not to take things personal. He understands how to endear himself to people he doesn't necessarily like. He's not fiery, he's not emotional, but he's a steady set of hands. Steve Jobs was the inverse. Steve Jobs was fiery, emotional, passionate. And so that kind of guy will build you a massive transformational business and deliver huge exponential results. Recognize that the genius of the shareholders of Apple has been they knew which CEO to appoint at which time. Could you imagine Steve Jobs meeting with Donald Trump and Donald Trump is attacking him? The meeting wouldn't go well. Steve Jobs was the kind of guy who spoke his mind. It would be a very, very short-lived meeting, right? But here you've got a steady hand, more tempered person with a calmer temperament who understands how to endear himself and how to play the soft game of politics. And when you run a business the size of an Apple, that's just the set of hands you need.
You are reminding me of paradigm. Leaders have to have a different patterning. It should be Jim Quick who says, you first create your habit,
then your habit creates you. Yeah.
And then it should be Joe Dispenza who says, your personality creates your personal reality. Then I'm made to think, why don't leaders don't want to change a patterning of their thinking in business. I wouldn't want to change things. I would wish if, the flow should just be as natural as possible for me as the CEO, but that's not how life operates.
Very good question. Change is difficult because change requires a premium in attention and a premium in disposition. So this is the reason why human beings find it difficult to change. By the way, I was saying to somebody at a board meeting the other day, I said, I don't believe people's words anymore.
Yeah.
I don't believe people's commitments.
Okay.
I don't even believe people's results. I believe in people's patterns.
Right.
If you want to learn a person, learn their patterns because they will repeat the same behavior.
Okay.
Right? So the question you ask is, recognizing this, why wouldn't people want to shift their pattern?
Yeah.
It's because it's difficult. It requires of you to rethink the way you think. And by the way, the things that drive how we think are things we're not in control of.
Right.
It's often things we're not even aware of. Now, you can shift stuff that you're aware of, but how do you shift stuff you're not aware of?
Yeah.
So if you have a deep set of inadequacy, a deep feeling of inadequacy that comes from a time in your past, and you're not aware of the genesis of that feeling of inadequacy, then you ascend to a leadership position in business. What do you think you're going to do? You're going to become a power megalomaniac. Why? Because you feel deeply inadequate, and so as an expression of that, you have to consistently prove that you have power.
Yeah.
Right? So the point about why people find it difficult to change is actually very easy. We're not taught as leaders to look inward. We're taught consistently to look outward, and that's a part of the problem.
But don't you think universities have been failing us? Because I did a master's in business leadership.
Yeah.
Probably I heard you the other day, you
Yeah.
said you did a master's in business management.
Yeah.
Why don't universities now teach us this new patterning of things? I'm wondering.
Yeah, look. How? Let me answer you this way. The magic doesn't lie in how.
Yep.
The magic lies in what. Business schools are instruments built on how. So what do you learn at a business school? What does the marketing course teach you? What does the finance course teach you? What does the strategy course? They teach you how to do marketing, how to do finance, how to do strategy. They don't teach you why to do marketing.
Like Simon
Sinek says, right? So the point about it is, the reason business schools don't teach you how to recognize your own internal patterning and how that internal patterning drives your decision making as a leader is because they're not geared to. That's not the instrument of a business school. The instrument of a business school is to teach you how to read a P&L.
Right.
Is to teach you how to see patterns in case studies and how to try and run away. You are, at the end of the day, it's a master's. Let's be clear. It's a master's in business administration. That's what it is. You're taught here about how to sign pieces of paper. Just you're the master at it. So a final note for you on this. I've often said, if knowing how to run a business was all you needed to do to run a business, then business school professors would be CEOs of Fortune 500 companies. But they're not.
You said it right.
Exactly. Because even though the business school professors knows all the literature and all the academic content, he's gone through all of the case studies about how to run a business. The reality when you do it every day is very different. How many people do you know watch a soccer match and think they can tell the coach about how to do it, but they would never dare be the coach because they wouldn't stand for the pressure?
Exactly.
Right. So this is, I think, this is often the juxtaposition of what is known and what works. And sometimes the thing that works is not the thing that's known. Sometimes the counterintuitive action is the strategy that delivers the result, not the thing the strategy document said you should do.
Right. In your book, again, you talk about cannibalistic thinking.
Yeah.
You are saying you need to eat or consume the core.
Yeah.
I'm thinking, Jonah, you have been building this business for 10 years. So do you mean I should just bring it down? What I'm trying to say.
What I'm saying is, take 10% of your net profit after tax every year and put that 10% of your net profit after tax every year into a business that destroys your business. That's all I'm saying. So if you have a team of 10 people, find one person who is crazy and sees the world as flat when we all know the world is round. and you put them on your payroll, and you say to them, I want you to disrupt my business. I literally want you to destroy it. I want you to find all of the places and opportunities where we are weak and inefficient, and I want you to build a business around those places and opportunities. Why? Because I know this is a law of nature. Nature doesn't leave open spaces. That's not the way nature works. And so if you leave open spaces in either the way you're structured or the way you do strategy, someone's going to fill that open space and they're going to eat your lunch. And you'd far rather be the person who's doing it yourself. So when I talk to business leaders about cannibalizing your core, what that means is, if I run a bank, what is the core of banking? I create an account, a consumer applies for the account, I charge them to use the account. And for every transaction that goes through the account, I charge the consumer. When they put money in a savings account, I pay them a little bit of a percentage. When they want to lend money, I leverage the money sitting in my savings, I put on some more money, and I charge them more than what it costs me to get the money from the consumer. And I charge the spread. That's the core of banking. So if I'm a CEO running a bank, what should I be doing? I should be finding 10 crazy analysts and going, build me the unbank. Build me the complete opposite of what my bank looks like. People who make money from doing things directly opposite to the way we do things. And by the way, it will fail. Right. So the thing about new, Jonah, new innovation is it is new, which means there are no standard operating protocols for it. And so in the world of effective efficiency, how do you run an effective and an efficient business? You write standard operating protocols for how that business must work. All large businesses have SOPs. The minute we move into an environment of innovation and new, there are no SOPs. It's the Wild West. And so what you want to do is you want to put a little bit of money into capitalize it. A last note for you on this. This is not altogether new thinking. The M badge from BMW comes from the motorsport division. The motorsport division of BMW used to be the skunkworks department of BMW. AMG was a company founded separate to Mercedes-Benz. It was bought by Mercedes-Benz, but the AMG guys were a group of crazy mechanics and engineers who bought Mercedes-Benz and souped them up and made them really great cars. So the recognition there is that what you want is a skunkworks, a crazy place where all of these ideas are allowed to germinate, and you want that to be a part of your offering as an organization and as a business, rather than something that's going to disrupt your business.
Finally, on these 7 thoughts of leadership, now Peter Sanj brings insightful thoughts on generative learning or generative thinking, where he juxtaposes adaptive thinking and generating ideas. So as a leader, how do you encourage them to generate ideas in their everyday business? It's not about sitting on the laurels anymore. The world is changing so fast. You look at AI is coming very fast. You look at automation, you look at 5G, we're talking about 5G. It shows that someone should be thinking on how to generate the next bounce of the ball.
I think that it's about time horizon, right? I think the reason most leaders don't shift, don't change, don't move fast enough is because most leaders have the wrong time horizon. So let's take a step back. If I'm a middle manager in an insurance company today, it's likely that I've been in that insurance company for minimum 7 years, most likely 10 to 12 years. And in that period, I can name the number of things I've seen actively disrupt my job. And they're very few and far between. So when you come and talk to me about these innovations that are going to disrupt my job, my reference point is my personal experience. And that is to say, if I haven't experienced those things, then I hear you, but I don't hear you. So the cost of making the change is not worth paying because there's no pain point. Human beings, and if you study now the world's seminal work by the economist whose name escapes me, who penned the first piece of literature on behavioral economics. What he talks to in that particular thesis is the simple idea that human beings are driven by reward, read pain, or pleasure. It's that simple. And so if you're a business leader and you want to understand why people aren't shifting or changing, it's either because there isn't enough pain to, or there's not enough gain. There's no pleasure. So most of us we have this conversation, the world is changing, 5G is coming, robotics, AI, but tomorrow when I get to work, my emails are still going to work, the board meeting is going to be the same, my shareholders are going to ask me for the same stuff. I hear you, but it's not translating to my lived reality right now. And that is true, for the world's largest carriage, operators, cars didn't exactly disrupt their businesses right now. For fixed mobile telecommunications companies, mobile telephony didn't disrupt their business right now. For many of the pay-to-play digital television platforms, content operators like Netflix and Hulu, didn't disrupt their business right now. It doesn't have to disrupt your business right now. And that's the problem, is that business leaders frame it and go, but it doesn't affect me right now. The current leader of Unilever did something interesting when he took over. He stopped doing quarterly SENS announcements to analysts. Now, when you're a listed stock, analysts need quarterly guidance from you about how your business is going to perform. And he stopped doing it. Something very interesting happened. When he stopped doing it, the Unilever share price started trading at a discount of NAV. The finance people understand that. In effect, what the market was saying was that the business is worth less than you would get for it if you closed the business down today and sold all of the assets and paid off the liabilities. Basically, every day you're running the business, you're eroding value, not creating value. If you run a business that trades at a discount of NAV, it's a perilously dangerous situation for a CEO because it invites hostile takeovers. I'll give you an example. You have R3 worth of assets, $3 worth of assets, and $1 worth of liabilities. Your net asset value, NAV, is $2, but your share price is trading at $1.80. So something's wrong here. So it's easy for me as a private equity operator, as a hedge fund, to go to the market and say, this stock is trading at a discount of NAV, give me $2, and I will buy the stock for $1.80, and I will get it to trade at $2.50. A good business should trade at a premium of NAV, not a discount. Because the net asset value is the assets. Above that, you have the management team, the strategy, the competencies. All of those should build into the value of the business. So anyway, he does this. And the share price trades at a discount of NAV. Warren Buffett, who at the time was with the Kraft and Heinz crew, went and made an offer. It was an unsolicited bid. The great Bloomberg English is it's an unsolicited bid. The correct English is it's a hostile takeover. And they made an unsolicited bid for Unilever. And the story is told like a fable. The board called a meeting and the CEO had to go and present. And he's sitting with a group of board members, some of whom are for the takeover, others who are not. And they said to him, what would you advise us as the CEO? And he said this. He said, as an organization, we can either build a business for billions of people or a business for billionaires. We can't do both. So if we go the quarterly announcements, short-term market commitments, we're building a business for billionaires, because who's worried about quarter-on-quarter performance? Billionaires that own hedge funds that own your shares. But if we want to build a business that's going to add value to poor communities in Punjab, if we want to build a business that's going to create new products for Libreville in Africa, if we want to build a business that's going to create a new product for Colombia, we can't be worried about a quarter-on-quarter performance. We've got to take a long-term view. That's a business for the billions. He said, I'm the CEO that's building a business for the billions. That's why I don't do, what's the point of doing quarterly SENS announcements? We're going to try something new today and it's going to fail, and now I have to tell the analysts it failed. Judge me on a 5-year term and see what I've delivered. And it's interesting to watch what's happened with that share price and how it's come back up. So the point about it is the disruption doesn't happen immediately. It never does. But if you wait for the disruption to happen, you'll be caught flat-footed, as they say in boxing, and then there's no opportunity to respond.
Thank you so much, Vusi.
Thank you, Squire. I appreciate it. I appreciate you coming. Good man.